Wall Street strategists, on average, expecting a slower pace of gains for the S&P 500 this year after 2 consecutive years of more than 20% gains. Yahoo Finance's Josh Schafer joining me now with more on where Wall Street sees the market heading. And Josh, it's really interesting because I always debate this to myself in my own head, this idea of gains begetting gains, but at some point, you can't just keep going that long forever.
Yeah, you can't go up forever, right? It's sort of what I think some of the strategists were getting across in these outlooks was, okay, after 2 years of 20 plus gains, Brian Belsky called it a breather, right? He said maybe we just take a breather and markets become a little more normal this year and you get normalized returns. Well, what's a normalized return from our level? If it's about 10%-ish, give or take, it's about 6,600, which is the median call on Wall Street among the 17 strategists that we track. They're calling for the S&P 500 to finish at 6,600. Again, Maddie, still about 10% gains.
Right.
Not a bad year, but it's not the rip-roaring bull market we've seen, right? And why is that? Well, part of it's because a lot of people think we're going to see the broadening out of this stock market rally in 2025. So if it's not the largest companies just chugging higher and dragging the index up, it's going to be a little bit harder to get index level gains if you're counting on the other 493. So that's one key reason. And then you also just have an overall part of the rally at this point where a lot of the stocks have already rallied, right? We're 2 years into this bull market. Year 3 of a bull market is usually the worst year of the 5 years. So at some point, things get a little bit tired, but we're using history here. So does that actually play out? I don't know.
Right. Well, it's interesting, too, because I got some family feedback that sometimes on the show there's this mix of too much optimism and then too much pessimism. So I think some context here could be that stocks getting cheaper is not necessarily the worst thing, especially for younger investors. Maybe this is an opportunity to get in. Trees don't go to the sky, whatever. So maybe if we do see a little bit of a correction, that's a buying opportunity.
There's a lot of and there's a lot of people that are saying they would probably be buying that correction, right? Even with the Santa Claus rally over the last week that has not come to fruition, people are saying, well, have the fundamentals really changed? Do you still feel good about earnings growth at about 15% for the S&P 500 next year? Do you still feel good about the U.S. economy staying on track next year?
Right.
If you're still checking those boxes, then maybe pullbacks are viable right now until the story really changes and there seems to be more concrete concern. Right now, it's a lot of things that we're worried about would say maybe tariffs and the Trump administration, what could that do? Is inflation not going to fall? But we don't really know.